We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelmingly on gold's side.
That is the best environment to see gold increase its value.
Welcome to Palisade's Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Brandon Munro, CEO and Managing Director of Bannerman Energy. Thanks for joining me today, Brandon.
Thanks, Tom. Great to be back on again.
Absolutely. Great to have you. And, our discussion last time was an excellent one. One of our most popular, really centered around the uranium industry. So it's been a while since we've spoken, and I'd like to get your thoughts around, the pain in the equity markets that we've seen, and really get your thoughts on how that has affected the industry's funding story, anything like that.
Well, it's having a clear effect on equities, uranium equities prices. And that's because it's just too hard for a small sector like uranium to swim against the tide. Mm-hmm. Most of the things that are dragging down the equities complex generally just simply don't apply to uranium. And maybe we can come on to talking about why there's a strong argument that uranium and therefore nuclear power is a strong defensive investment for investors who are concerned about negative macros and recessions and so on. But, we're a tiny little industry. And when the broader resources sector goes down, what we've seen is that uranium equities have held up very well relatively to other equities, but it's too much to ask of the sector to swim against that tide and maintain positive returns. However, I think where a lot of investors are remaining comfortable and remaining holders is that once equities settle down and once we see a return to positive sentiment, then there's a number of factors that I would expect will really accelerate growth there from uranium equities. And from that point on, I think it's a good time to be in uranium equities.
Mm-hmm. So maybe we can pick up on that, Brandon. Why is it that you think that uranium can be such a defensive investment in this time?
Yeah, I mean it's a great thing to understand. It really is. So if you think about it, nuclear power reactors, nuclear power stations, the major predominant part of their cost of producing electricity is capital. So once they're built and they run. And we're now finally in an environment of, let's call it awareness around the world, that we've realized that closing down nuclear reactors before the end of their economic life is a really dumb idea. And it kills me to tell you that it took the world good 10 years to figure that one out, but they've well and truly realized the folly of that pathway. So we're not seeing reactors being closed down for political reasons anymore. And those reactors, they still need their fuel, which starts with uranium. And what we've got in the sector is a supply deficit. The amount of uranium being burnt around the world or used up or consumed in nuclear reactors is by a very significant margin, less than what's being produced from mines. And at the same time, the main contributor to that deficit has been twofold. Number one, secondary supplies, and they're also decreasing for various reasons that we can come on to. And then the other one has been drawdown of inventories that were built up after the Fukushima accident in 2011, as utilities continued to honour their long-term contracts and bought more than they needed on a global basis. So what does that mean? Well, that production has come right off since the days of Fukushima and the aftermath of that. So the inventory levels that the utilities have been relying on to fill that deficit have now returned to normalized levels. In fact, we've got competitive buying for that inventory in the form of the SPUT Physical Uranium Trust, which, although being quiet with equities not being the engine driver of that, is still consuming a substantial amount of the world's available uranium. And that supply deficit in a negative macro scenario, I can tell you it's not going to be easier to finance uranium projects. So it's not going to be solved. So you've got a scenario where the demand will be there for existing reactors, let alone demand growth, regardless of what the world is doing. We could see the world plunge into a deep recession. We could see major markets go into a depression, and nuclear power that's already installed will be the last form of electricity turned off, because its marginal cost of producing once you've built them and paid for the capital is so low. And then you start to layer in some of the other factors that are seeing what are the things driving the fears? Well, it's an energy crisis that's driving the fears of a global recession. So not only do you have that defensive aspect where uranium is, in my mind, when you work through all of the defensive asset classes, healthcare and the usual list, uranium has to be right at the top for the reasons that I've described. Mm-hmm. But it might perversely get a great big boost as well, because if the reason for fears of global recession is an energy crisis, well, suddenly we've got a situation where nuclear is enormously competitive, particularly if it's already installed, but even new nuclear. So what I would say is, if you were to be, as an investor, if you were really conservative and really concerned, and you wrote a line through all of the new nuclear because you decided, for example, in a worst case scenario, it would be harder or slower to finance, this is still a great investment. But I don't think the concerns about climate change are going anywhere. Concerns about energy security are utterly resistant to recessions, because recessions increase the risk of national security. They don't decrease them. Mm-hmm. So I would therefore argue, on top of that, we've still got a strong demand case over and above the existing fleet of nuclear power around the world, regardless of what's happening on a sort of year-to-year macro level.
Mm-hmm. Yeah, it's interesting that you mentioned this change of attitude. Obviously, recently we saw Greta Thunberg, for example, say that the shutdown of Germany's nuclear power plants are a mistake. So do you have a sense that the attitude towards nuclear is really changing, and that momentum is kind of building within the sector in a positive way as viewed by the public?
Yeah, it really is. So the interesting thing about trying to track sentiment in nuclear power, and unlike many other industries, it's really vital, because it's the main driver of growth of nuclear power. The science, that was decided long ago. So anyone who's prepared to actually have an open mind to statistics and science, and they know that it's the answer. It's a sentiment that's either holds it back, or now we're seeing propel it forward. And there's kind of a hierarchy of awareness, or hierarchy of visibility of that sentiment. And it ends at the political end. It starts with the scientific and energy community, the people who actually understand this stuff. And that happened quite some time ago. But it takes some time for that to get elevated to policymakers, who are the ones who are kind of carrying the bag if poor decisions are made, if they're still in their bureaucratic public service jobs. Mm-hmm. Then it moves on to people who are able to influence the general public. So journalists become interested. Then it goes to the general public. And we're kind of at that level where surveys are showing that in most markets, there's a majority in favour of nuclear power. Then it goes into, say, mainstream media. And only once that is all in place do the politicians get brave enough to talk about it in positive terms. And Australia, is, as much as Australia is not an important market at all for nuclear power or uranium, it's a great example of seeing that cascade change. And we're not at the point yet where the politicians are brave enough for it, but we are at the point in Australia where we're seeing surveys time after time show that the number of people strongly in favour is greater than the number of people strongly against. And in that middle zone, there's an overall slim majority in favour. Mm-hmm. You go to the US, well, years ago, 3-4 years ago, we saw bipartisan support for nuclear power. And other than the kind of the anti-nuclear holdouts, it's kind of become universal in North America that this is a good idea. And we're seeing the results of that with Diablo Canyon now turning around. That's not something I had in my uppercase model 5 years ago, I can tell you. Similar things in most of Europe. The Germans, they're still really struggling with the idea of keeping perfectly efficient carbon-free reactors running, but they're a special use case. But in the UK, it's really strong. my observation after being in London a couple of times recently is that the momentum towards nuclear power in the UK, it's that broad-based support and action that the UK is famous for example, during a wartime. They're really mobilising in favour of nuclear power. You're seeing the leadership from the politicians, but you're also seeing the action there, cutting swathes through some of the green tape and the red tape associated with approving nuclear power reactors. Rolls-Royce is going full on with their kind of indigenous or made in Britain approach to these mid-sized reactors, these SMRs. And of course, France has now turned on their heels really and gone from a political era initiated with President Hollande, where they were killing their nuclear power industry from within, to now 180 degrees. And they realised that nuclear power is the future of not only their energy in France, but they've realised that it's a future of their whole economy.
Mm-hmm. So, we kind of mentioned the idea that really the cost of capital obviously has gone up significantly. If we do get a worldwide recession, does this really affect the non-built or the reactors that are slated to be completed, that are slated for construction here? Do those plants still get built if they're required to get funding from the markets in a time when the global economy really slows down?
Yeah, so about 3 years ago, Tom, I would have said, yeah, that's definitely a risk. Mm-hmm. What's changed in the meantime is, and in a number of markets, UK being a great example, governments have realised that they need to provide more flexible funding mechanisms for nuclear power, because the cost of the electricity that comes out of a nuclear power plant is so sensitive to the cost of the capital. So it doesn't make sense that it goes to an 8% cost of capital to build a nuclear power plant. And governments have realised that there are many things that they can do which doesn't place any additional burden on the taxpayer, that reduces that cost of capital down to more like 4%. Mm-hmm. And then you've got models where the government just pays for it, such as more like in many cases, the Chinese model and other examples around the world that we're seeing. In one form or another, it goes straight onto sovereign balance sheet. So what that's done is that's created a significant buffer for the risks in those markets that we might see nuclear power cost go up because of the cost of capital. In markets that still are operating on the approach that they need to be 100% privately financed, well, on the one hand, yes, we do have the additional pressure coming from cost of capital as interest rates and cash rates go up. However, on the other hand, we are seeing pretty much across the board, the competitive sources of energy go up significantly more. So the sensitivity of gas or coal to the cost of their input, being the gas or the coal, is far greater than the sensitivity of nuclear power to percentile changes in their cost of capital when they're building.
Right.
And we haven't even got on to the fact that the sensitivity to the cost of uranium, pardon me, is vastly different to the other two examples that I've given. So what's been hurting nuclear power over the last decade, say in the important market of the US, is shale gas being so cheap and huge government incentives and subsidies for renewables. And that combination has made a number of reactors uneconomic, and they were shut down, sadly, and we won't see them come back on anytime soon. Now we've got the combination of those competitive energy sources increasing dramatically, renewables as the subsidies drop off and they start hitting peak wind and various other things that reduce their economics. And in the case of shale gas, that's gone up threefold, and it'll probably settle at more than double the level where it was really hurting nuclear power a few years ago.
Yeah, it's quite interesting to think about the economics of the shale industry, and really in a way that the destruction of that industry as interest rates have climbed. There's many of those projects that just aren't economic with interest rates past 2-3%. So as you point out, that is that's a trend that is going to be coming back down. And really it's due to just the cost of capital. Kind of on this global idea, do you get the sense that with the trend of deglobalization that we're seeing, that certain countries will start to apply their reshoring efforts to their uranium supplies as well?
Yeah, undoubtedly. So hand in hand with deglobalization is the concept of energy security. It's something that we understood as a world really well in the 70s because of the oil crisis. Mm-hmm. And then after the fall of the Soviet Union, and in particular in the last 10 years, when the entire focus of whole markets for power has been ESG and it's been green. And it's just been simply forgotten that energy security is really important. And that has been horrifically and tragically demonstrated with the folly of Germany's total cedence of their energy security to Russian gas. Mm-hmm. And both from a social point of view, because it's contributed significantly to a war in Europe, but also even from an ecological point of view, in terms of the amount of coal that they're now burning, because they've lost that energy security, and that's been the only solution that they've got. So the awareness has been dramatically changed, and everyone's starting to bring out the old playbook from the 1970s. And for people who follow history, I wasn't a particularly useful commentator because I was still a small kid in the 1970s, but I've gone back over it, and nuclear power is really fascinating. If you take the real cost of uranium during the 1970s, in today's dollar terms, it was trading at well over $200 a pound. So that just shows that it's very inelastic and very insensitive when you start to place a sovereign or a bilateral or a multilateral value on the cost of that security. And just to bring it back to nuclear for a moment, nuclear's got two layers of really attractive energy security. So on the one hand, even for countries, let's use Japan as the example, countries that don't have their own uranium, for a very, very insignificant proportion of their national balance sheet, they can buy whatever uranium they need, get it enriched, and put it inside their borders where they can store it securely. It doesn't go off for as long as they need to. So Japan, before Fukushima, they treated energy security and resources security very seriously. They still do. And they always had a policy that they would look forward 5 years, and whatever their demand was 5 years from now, they needed to have 5 years worth of that sitting inside their border. And that's very sensible because it enables industries to grow, so that when they were growing their nuclear power fleet, they were enormous buyers and stockpilers of uranium. Now, interestingly, that has worked the other way in recent years, because when they shut down 49 reactors after Fukushima, they obviously had all of this inventory, which took them out of the market as a buyer for a long period of time, but they are coming back in. Mm-hmm. So that's the first aspect. You can achieve synthesized energy security through nuclear power, even if you don't have uranium inside your own borders, simply by stockpiling. Now, the second thing is, commercially, it offers outstanding energy security because the cost of nuclear power is very, very consistent over time versus gas or coal. So as Germany's just found out, in fact, as they've found out on behalf of the whole of Europe, when you lose your energy security, your cost of inputs go up dramatically. But all of the nuclear power stations that are operating in Europe, their cost of nuclear fuel hasn't changed by one digit during that period of time. So it gives you an economic and a social layer of security that's on top of that sovereign level of energy security. Mm-hmm. And that is really well understood amongst policymakers who are, obviously very stressed about what's happening either around the world or inside their own borders right now.
So, in some ways, do you think this really gives the last, the energy crisis really gives the last shock or the last catalyst to the system to really change the tide or change the public opinion against uranium?
No question. There'll still be holdouts, right? So we're not going to win every country in the world, and that's fine. We don't need to. Mm-hmm. But in the markets that matter, and the growing markets that matter, such as Poland and China and India, that penny has already dropped. It's already dropped in a very significant way. Mm-hmm. And even the attitude within the nuclear industry has changed. It's now not a question of, well, will there be the demand? The attitude in the industry is like, how are we going to meet this demand? How are we going to produce enough reactors? How are we going to bring small modular reactors on soon enough? How are we going to address the nuclear fuel aspects of that? Where are we going to find enough uranium? So that, for me, is a real leading indicator. When the industry stops being stressed about how badly they've been beaten up since Fukushima, and suddenly their acute stress is, how do we meet the role that nuclear power is going to have to play? For me, that was very instructive, that we're in a very different time. And various government bodies, from UN Economic Commission on Europe through to the IEA, for example, are now putting higher degrees of nuclear growth into their models. Now, for a whole bunch of reasons, those models fail to adequately model the role that nuclear power has to play. So I remain an order of magnitude more optimistic about what nuclear is going to have to do if we're going to achieve any level of carbon abatement. But even if you just follow the way that they look at the world, it's a big growth in nuclear power, and of course that means big growth in uranium.
Mm-hmm. So obviously, with Russia, really being segregated from, let's say, the West in a lot of ways through sanctions and things like that, how important of a source was Russian uranium to the rest of the world? And have the sanctions really affected that supply side of the equation?
Yeah, so good question, Tom. And this is where we need to do a quick little 101 on nuclear power for your listeners who don't sort of live and breathe this stuff. Mm-hmm. You've got uranium, which is the product that's mined. That's a product that my company will be mining soon. Then you need to convert it to a gas, UF6, and then you need to enrich it, and then you need to fabricate it so that it can go into fuel rods that then go into reactors. We can go into that if you want to, but the key thing to understand is that each of those different components of the nuclear fuel cycle have got their own markets and their own dynamics. Mm-hmm. Now, when it comes to uranium, yellow cake that's mined, Russia is a significant but not a big player. Like, I'm sitting here from Windhoek at the moment because our project's in Namibia, mm-hmm. and Russia is a far smaller supplier of uranium than Namibia is. For example, roughly 6 to 7% of the world's uranium comes from Russia. Okay. However, they're a significant provider of conversion and the world's dominant provider of enrichment. So back in the day, they invested heavily in what was then new enrichment technology, which is still the current technology, and they provide 42% of the world's enrichment. So they are absolutely dominant. And that's where the industry's scrambling, and that's where sanctions can have a big impact. Not so much the uranium, but more the enrichment.
Mm-hmm. Yeah. So where does that enrichment supply end up coming from now? Who picks up the slack in that? And are some of Russia's strategic trading partners, let's say China, for example, are they able to capitalize on the fact that Russia can't sell that maybe to the market that they used to have?
Yeah, so there's two aspects to this that are interesting. The one that I'll deal with really quickly is the political domain and the political aspect. Mm-hmm. So the US, for example, has got going through the motions as a draft bill, a sanctions bill, which will basically say from 2026, you can't continue to import Russian enrichment or Russian nuclear fuel.
Okay.
2026, because they understand they need to give the reactors and the nuclear power utilities the opportunity to adapt. Mm-hmm. Now, from that point, that would create a force majeure opportunity for those utilities who have got long-term contracts with the Russian providers. So that's the moment when they really need to figure out what's next. Now, there is talk of the capacity for an exemption. So, but certain utilities, regardless of whether they could get an exemption from those sanctions, will have so much pressure from their own stakeholders that forget it. They're just going to have to find an alternative. There's a lot more that I could say on the political, but let's leave it there for now. Mm-hmm. Now, when it comes to the market and back to uranium, which is what most people are interested in, there's a fascinating dynamic that some of your audience will already understand, but there's already excess capacity in the West for enrichment. And the reason is the whole process of enrichment is about taking uranium, so yellow cake consists of two different isotopes, uranium-238, which isn't useful, and uranium-235, which is the isotope that's fissile. That's the isotope that can go through a chain reaction that can therefore produce the heat that can generate electricity. In natural uranium that comes out of the ground, it's only 0.71% uranium-235. So that has to be enriched up to anywhere between 3 and 5% for conventional nuclear reactors. So that's what enrichment's all about. Pretty complicated, but simplified, that's what it's all about.
Yep.
Now, what the West has been doing for quite some time is they've had a little bit of extra capacity in the enrichment. And so what they do is they use that extra capacity to squeeze as much of the uranium-235 out of the natural uranium as they possibly can. And for people who follow this, that's called underfeeding. And that's been a significant supply of secondary supplies, which I referred to towards the beginning of this chat. Mm-hmm. Now what we've seen is a total reversal where the West has already understood that the constraint is not trying to optimize all of the value out of their uranium, but it's totally the other way around. And they've got to use every last SWU, which is the word for, that's how you measure enrichment capacity. They need to use every last bit of SWU that they can. So they're effectively forcing uranium through the system, and so that underfeeding, where they try and squeeze every last bit of uranium out, that's now out of the market. So that significant supplier of secondary supply into the world deficit is effectively gone in the West. Mm-hmm. Now, of course, Russia's developed its own excess capacity, or it will over time, but they tend to operate in kind of a bit of a silo. They like to meet their own needs. They've got their own uranium mines that they'll bring on. And I think what's likely to happen is they'll say, well, look, we've got this extra capacity that we're generating through this excess enrichment. So instead of bringing that mine on in 2030, we'll bring that mine on in 2032, and we'll leave the resources there for strategic reasons in the meantime. So I don't believe it's just a case of squeezing the balloon. I believe it will have a direct impact on the uranium market by reducing the supply that's available. And effectively, uranium will be wasted in this enrichment calculation as the West tries to maximize every last SWU that it's got available in its installed enrichment. And the one final thing I'd say about that is it does take several years to increase your enrichment capacity. So to permit and build new enrichment facilities, even with strong government support, it's still going to take time. So it's going to take some time to be able to normalize. And so in the meantime, we've seen the end of underfeeding, and we might even see it flip the other way and see a concept called overfeeding, which is the opposite.
Yeah, it seems like every development and every mine, every piece of infrastructure, every piece of enrichment capability really just it takes a good amount of lag time to be able to make any of those changes happen in this market, right?
Absolutely. And going back to one of your earlier questions, why is uranium a fantastic defensive investment? Because those lags apply absolutely to the uranium sector. On our project, we've been working on it for 15 years. Mm-hmm. And, we've just published a definitive feasibility study, and now we've got financing ahead of us. It takes a long time to build uranium mines and get uranium production. Mm-hmm. And that lag will become more challenging, particularly for earlier stage projects that are still needing to get equity capital to fund resource drilling and feasibility studies and the kind of the less stimulating of investment activities that you've just got to go through to get from an exciting discovery to being able to produce. So it applies to enrichment, but it applies probably even more acutely to increasing uranium supply to try and address that imbalance. And of course, the end result is the pricing mechanism. And so that's why I feel very optimistic and very bullish about where uranium prices need to go in either of those scenarios, a positive global macro or a negative global macro. Those reactors will still need to run, and the price of uranium will increase to the level that enables them to run.
So, Brandon, the last time we spoke, you mentioned that within a couple months, the industry would get more clarification on how much mobile inventory there actually was within the market. So, did you ever get that signal that you were looking for? And could you give us an update on that idea in general?
Yeah, I mean, to a large extent, we've got that signal. It's still fairly opaque. The major event that's happened over the last 18 months in the sector has been the outstanding initial success of the SPUT Physical Uranium Trust. And they accumulated about 40 million pounds. And in so doing, they became a very, very useful source of data for how easily they could buy those pounds, what sort of a price effect it would have in accumulating those pounds. And from that, you can infer or induce a lot of interesting you can really understand what's happening in the mobile inventory market. So the general view, talking to those traders or talking to other traders or talking to the utilities, is that mobile inventory, the loose material, the uranium that parties were kind of pretty happy to let go, that's now been almost entirely absorbed. And so what I'm looking forward to is broader equity markets improving, sentiment changing, and money starting to flow in a substantial way back into the SPUT Physical Uranium Trust so that they then start buying again, because that, apart from being something that uranium investors will be very interested in because it's likely to have a price impact, it also gives us very good clues as to, is there any more uranium available in this mobile inventory category? And Tom, two things happen at the same time then. One is, in absolute terms, the amount of uranium that's available to be bought at a price decreases because it goes from being in the open market to being locked away into the long term, sequestered in the SPUT Physical Uranium Trust. But the other thing is the utilities and market participants' view on what might be surplus to their needs changes as well, because in a tight environment, they say, well, actually, we're not going to let some of that uranium go. We'd actually be better off restocking. We'd actually be better off restocking than destocking. So it affects the availability in the direct and that indirect way at the same time.
So, Brandon, we were talking about this idea of, different sources of supply, different deficits. Why is the $80 per pound the incentive price to meet the demand for uranium over the next decade here?
So that's been a number that I've been calling for probably 5 years. And let me tell you, it wasn't a very popular thing to do when uranium was trading at $18 or $20 a pound. And the reason why we formed that view back then, which continued to obviously inform our corporate strategy and the way that we developed our asset, is we modeled the entire sector. We modeled the demand, we modeled the supply, we worked in different scenarios. We, of course, applied our own judgment as to how quickly projects had come on board, how quickly new demand would come on with nuclear power reactors. And we did all of that work at a really at a really detailed level. And we realized that once you've maxed out the actual or commercial capacity of the existing supply, and there's a little bit more that can come on. Then once you've brought on the restart mines, so the mines that had to close down for economic reasons during the bear market, and then you look at, well, which projects are then ready to go? There's very few. And some of them will require $90, $100 uranium to make them work. And so that's why the incentive price will need to go to a level which we think is at least $80 to bring in those new projects to enable the forward supply in this decade to meet what we anticipate demand will be. If it sits at 60, which is roughly where long-term contracts are being written at the moment, if it sits at 60, there just won't be the new mines that come on, and the industry will suddenly have a crisis and we'll suddenly see a spike. So what I would prefer to see is, rather than 60 and then suddenly uranium spikes to 200, I would much rather see a steady increase to that incentive level. Mm-hmm. And the thing that I would add is, when we did all of the modeling and started calling $80 back in 2016, 2017, we've had an inflationary effect since then. So, obviously from the side of being a uranium supplier, I'd expect and hope that we'd see an inflationary premium put onto that $80. But I think if we just leave it at 80 for now, I think, our project looks fantastic at 80, and uranium investors will be pretty happy when uranium goes to 80. They can put whatever numbers above that they want and start dreaming away.
Mm-hmm. So, when we think about that incentive price and all of the downstream effects from that, more exploration, more mine development, ideas like that, how long is that the spot price that has to stay at 80 to really drive that incentive forward for companies to start investing and reinvesting some of their profits?
No, I mean, when you talk about incentive price, you are typically talking about a long-term contract price.
Okay.
Because that's what enables mines to get financed. Mm-hmm. And over time, it's been at between a 10 and a 20% premium to the spot price. Mm-hmm. So it might be that the contracts are being written at $80 and the spot's trading at 70 or 75. Mm-hmm. So if we go back to the last boom, uranium hit, now these are nominal figures. In real figures, it's a lot higher in today's dollars, but in nominal figures, uranium hit $136 as a peak.
Right.
But during that period of time, term contracts were being priced at $85 over an extended period, 8 or 9 months. And then we had the GFC, the global financial crisis, and a couple of other events in the sector. And the spot price came right down, and over time, the term contract price came down as well. So perhaps the second part of your question that you asked is, well, you see a spot price at $80, surely there's going to be a whole lot of exploration and a whole lot of uranium coming into the sector. Well, over time, yes, and over time, that's exactly what the sector needs. Mm-hmm. And for the health of the nuclear power industry going forward, that's what I would hope would happen. But it just happens in glacial ages when it comes to nuclear power. So Bannerman Energy, our Ratango project, we started drilling that in 2005. Now, we had a bear market in between. That's certainly given us more time to work on it. Mm-hmm. But that was 2005. And now we've just put out a DFS that shows that the project's viable, and we can now move towards the last steps of marketing and financing and getting into construction. It happens that the timeframes are very, very slow. Mm. And in a country that isn't 100% supportive of nuclear power like Namibia is, those timeframes can be even longer.
Mm. Yeah, that was really the focus of my question, was to really understand how long that price needs to be at that $80 level to really incentivize new development period within the sector. Brandon, since the last time we spoke, we touched on the idea of the carry trade within uranium, and that SPUT could really have changed that idea. So would you mind sharing with us how you explained that concept to us and how it has developed over the last year?
Yeah, so the carry trade is basically where traders would buy uranium now. And it was a very popular mechanism when uranium was trading at $18 or $20 a pound, and then use very cheap finance to carry that to a period in time, say 1, 2, possibly even 3 years hence. And when they buy it on day one, they already reach a legally binding agreement to sell it to the utility on year 1, year 2, year 3 at a fixed price. Mm-hmm. So they would literally say to a utility, look, we know that we can get uranium at $21 right now. So would you like delivery in 24 months at $24, for argument's sake? And because the cost of finance was next to nothing, like particularly for Macquarie, who were active in this space, they'd use their massive investment banking balance sheet to get almost free money. So holding that uranium for those 3 years was just the cost of storage. And so the traders were able to put a nice little fee onto that. In those days, Kazakh production was readily available, so they had no problem buying the material in the spot market. And what it did is it gave the utilities every reason not to do long-term contracting. Why would you, when you can just keep getting this cheap material 3 years out, 3 years out, 3 years out? And it even was referred to as the crack cocaine of the sector, because, you like with drug problems, the utilities focused on the carry trade and then forgot about looking after the kids, which was the long-term contracting and the long-term picture. Mm-hmm. Now, that's out of the market now, partly because SPUT has made it really hard to get access to that spot material. If you can't buy it now as a trader, you don't want to carry any risk with that. Secondly, Kazatomprom, in the last few years has become a lot more effective at selling its material, so they don't sell into that demand anymore. And then the other thing, of course, what we've been talking about is that era of free money has gone as well. So whilst that isn't the driving force, it is making it less attractive versus a utility entering into a long-term contract and securing its uranium that way. Now, short-term contracts still exist. It's just that it's the market distortion that we saw from the carry traders now gone.
Mm-hmm. Excellent, Brandon. Well, I know we're kind of coming up against time here. Do you have anything else you'd like to add before we wrap up today's conversation?
Yeah, well, I mean, if you don't mind, people who follow Bannerman Energy and follow me, they'll be interested to know that we've just put a definitive feasibility study out into the market. Mm-hmm. That's on our Tango 8 project. We've been working on that since August last year. So it means a lot to me that we've done that. It's a really good result. We've essentially kept the economics the same as our PFS. And I can tell you, in the current cost inflation market, that's a massive win. So we reduced our operating cost by about 5%. We increased our capital cost by about 15%, although that did include new investment in asset handling facilities at the port, which further de-risked the project. So it's been a great result. It puts Bannerman Energy into some very rarefied air. Not only do we have an advanced uranium project in a fantastic jurisdiction, being Namibia, but we've got a DFS that's current. So investors don't need to scratch their heads about, should I be factoring a 50% blow in those capital numbers, because that study is already 12 months old. Mm-hmm. So it's been a really busy couple of days. So if I was going to say that
must be a hell of a relief and a good feeling to get that off your plate.
It sure is. And, markets are all a bit choppy at the moment. So, but, with an advanced technical study like this, it's all about the momentum and it's all about what this enables us to do. So really looking forward to next year. I think the setup for 2023, both in uranium generally, but certainly for our company, Bannerman Energy, looks very, very exciting. And having the DFS out this year before Christmas just means that we can be focused entirely on the value proposition that the company can deliver without having this question mark about what's the technical study going to look like? What are capital costs going to look like? How are they going to control operating costs? That's now out there. And now we can just focus on how we can deliver value for shareholders.
Excellent, Brandon. Well, I wish you guys the best of luck going forward here, and hopefully the good news continues. Of course, you guys are available on Twitter, both wonderful follows at Bannerman Energy and as well as Brandon_Munro, MUNRO. Thanks for your time today, Brandon. Really appreciate it.
Thanks. Great to be back on, Tom.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.